We are getting an opportunity to share some of the most beautiful, some of the most lovely curated investment ideas that we bring to you. And we bring to you this thing month after month, sometimes twice a month, depending on the availability of our guests and speakers also. And again, Multimillionaire Forum, it's a place where we believe that this is one area where you could come, you could join, you could participate, you can post your questions. We're doing this thing on Facebook Live, so just feel free to put in your questions there as we sort of move along the next 30 or 40 minutes. We all know that great returns happen, when you take great investment decisions, and Multimillionaire Forum is just one of those places where you might just get this opportunity, and something might happen. It might ring a bell to you. You might feel motivated to do something that you've never done before. You might find out a new idea for yourself, something that you were looking forward to, or we will try and help you with one of such ideas. So that's why the Multimillionaire Forum is here for you. Today, my guest is my friend Raj Mehta. Raj Mehta is a fund manager at Parag Parikh Mutual Fund. Now, Parag Parikh Mutual Fund has the name of its founder, Parag Parikh. Parag Bhai, late Parag Bhai, I should say, was one of the most savvy investors who followed and believed the principle of value investing, which is a science of investing which believes that let us buy shares which are absolutely at a fair price, not at a fantastic price. So you might have a great company which is at a fantastic price, but that does not make it a great investment decision at that point in time. You have to wait for that fantastic company to come to you at a fantastic price also, and that's what value investing is all about. He's written a lot on in the subject of behavioral investing as well. So that's a little introduction on late Parag Parikh. I completely admire the person. I've met him in person many years ago, of course, while he was there, and unfortunately he passed away in a car accident a few years ago in America. So having said that, that's about Parag Parikh Mutual Fund, a very unique and a very different mutual fund who's come to the Indian market with just one equity fund, just one, okay, versus the 30 or 40 different funds that we have. And we're going to talk about one of their funds, which is the long-term equity fund. And within that, we have a very interesting theme that we are going to talk about. And that theme that we're going to talk about is the theme of international investing. Why should we invest internationally? What's wrong, for example, with India? Now, that's the first question that comes to the mind of most of us when we talk about investing internationally. So we think on one side that the Indian investment market is so robust. India is on a growth pace, despite the COVID-19 situation that we are faced with, and the fact that our GDP is going to fall down. We are not going to progress as much as we were thinking we would progress, and things like that. But despite that, the $5 trillion economy is pretty much on its way. It's not gone away anywhere else. So in the light of this background, why are we even talking about, or why are we even thinking about international funds? Now, I want to show you a handful of things first so that you get a sense of why is this international investing a very interesting idea and which we must consider. Okay, so here is something for you to chew on. Now this is a little information and data point which I collected from another presentation, and the source is from Axis and a couple of other places. So what this slide particularly tells you is that in America, which is typically 41% of the world market capitalization, that is to say that in the entire world, the total investments out of that 41% happens in America. And within America, the American people invest about 80% of their money in their own country. Compared to that, in India, almost all of us, which is 99.8%, or let's say that's almost 100%, we invest our money in India. Why? Because we have familiarity, we think we know India, we think we understand the Indian business, so on and so forth. And lots of other reasons, comfort factor, the fact that we are here, the fact that we are Indians, we are familiar, and India is on a growth path, so why don't we just invest in India and forget about investing anywhere else in the world? So that's one statistic to see that we as Indians don't normally go. And most of the times we are talking in terms of the return that we can get from India. So if we get fabulous return in India, why should we really go outside India? Now, let me show you another picture here. Okay. Now, this is a little bit of a complex slide. There's a lot of action happening on this slide. But what this basically tells you is that this is an analysis from 2010, which is the last 10 years. The topmost row that you see here are the countries that had the highest return in that particular year. And of course, this is in US dollar terms. So as you can see, popular to the general belief, that the Indian market is obviously going to do very well. So contrary to that, you can see that the US market was the best performer in 2011 and 2013 and 2018. And having said that, India was the top performer in dollar terms in 2012. And Japan was likewise the highest performer in 2015. So this is an analysis of the yearly data. And as you can see, these little light green patches, India. So India is not really on the top row all the time. It's entered about 2 times as the second highest, about 2 times as the third highest, and India is basically all over the place, which means that Indian market has not been the top performing markets in all the 10 years of the last decade. And you've got the US market, which is far more outperformed because it's the largest market of the world, that has outperformed. And not only that, there are companies from various parts of the world which are also doing some great business. And if we have a vehicle and an opportunity to invest in some of these, why not actually think about it? Why not actually consider it? So that's that's the background. That's the case that I really wanted to talk to you about. But why international investing? Now I want to present to you yet another perspective before I bring Raj in. Think about it in dollar terms. Okay, today in the Indian market on the Nifty, we are at about 13,000. In 2008, which is the time where we had the last major rally and then the major fall, at that time, the Nifty was around 6,250, say 6,500, just for simplicity's sake. So we have sort of doubled. It's been 12 years. So from 6,500, we are at 13,000 now. We are double. However, the US dollar's exchange rate to the Indian rupee in 2008 was about 40 rupees. And today we're close to about 75 odd rupees. Now think about it in that fashion, that in a 12-year period, if you were a dollar investor, if you were a foreign institutional investor or a foreign investor who came to India and looked at India as an option, then in 12 years time, purely on the index, you have moved somewhere from 6,500 to just about 6,500, 6,700. Because if you sort of divide 13,000 of the Nifty by 2, which is the doubling of the US dollar, then you will see that we have been pretty much at the same level. So a dollar investor may not have made as much as money as much as maybe a Indian rupee investor would have. Of course, there are companies which have far outperformed this kind of a statistic. But having said that, it's just a perspective for us to understand what is exactly happening from a US dollar perspective, and why we should also have some US dollars in our portfolio.